Hello everyone, George DeSantis here with the look at the market. Uh, it's um, it's Wednesday, September 29th, in the middle of the week, of course, and I thought I would do a brief video because the market has been giving us all these mixed signals, mostly down, mostly bearish signals. But I'd like to discuss some of what I'm seeing on the charts, okay? So let's bring up the disclaimer first. And that disclaimer is simply to instruct you that I'm not attempting to give any particular person investment advice. I'm describing what I see as a general market at this time and perhaps a few individual stocks as well. So let's begin then. Let me get rid of this. So here's a weekly chart of the S&P 500. Um, First of all, let's take a look at some of the trend lines. We can see that the 4 EMA is now seemingly crossing below the 9 EMA, that red line, right? And the price bar, the candlestick, is now sitting just between that 9 EMA and the 30 weighted moving average, this one here, the green one. Parabolic 2 weeks ago, and including this week, was switched from being below in a bullish position to being above the most recent bars. So now we have, including this week, we have 3 weeks of the parabolic indicating we're in a downtrend on the weekly chart. And that's not good. That's where we make our tactical decisions. So these are some of the negative things here. Let's continue to see what else is negative on this chart. The next thing I'm noticing here is that the sum of the rate of change indicator, or the triple momentum indicator, this one has been trending down, making lower highs for some time. Right now, it's just above the 4% line, and it hasn't crossed below the 4% line since it did so back in February of last year. And of course, we know what happened then. We had this big drop here in March. We started coming back at the end of March. So another thing that we're noticing here is that on the weekly chart, we had this bearish divergence of MACD. As the market made new highs, MACD is making a lower high. And since then, we've come down for 4 weeks now. We've been declining, okay? On the other MACD indicator, the one that we take sell signals from, we get a similar picture. Same bearish divergence of MACD. And of course, we got sell signal here, okay, 3 weeks ago, 4 weeks ago. And since then, we've been trending down. So remember that this triple momentum indicator and MACD, these are momentum indicators, all right? They give us similar information. All right. Now, insofar as what sort of glimmer of hope is there, if there's any, notice that we came pretty close to a 2 standard deviation Bollinger Band. I plotted the Fibonacci retracement level from this low to this high, and these magenta lines here give us the retracement levels. So if we look at those levels, we find that the 618, the 61.8% retracement level was at 43.52.59. And by the way, that's exactly just about on to the penny we closed there yesterday. Okay, so on the weekly chart is what we're looking at here. We are now sitting, we came close down, all the way down to the 618 retracement level, this magenta dotted line, and we rallied a little bit from there since. But that's the only thing now. The question becomes, is this 618 Fibonacci retracement level going to act as support? And if you look over here, you'll see that I drew a line where Larry McMillan, the options guru, as I call him, Larry McMillan was showing us that, in his opinion, this was the next support level after areas up here, because this was a previous low. So 43.70 was the previous low, and we broke through that, and market rejected that last week. But this week now we're coming back down and sitting right there at 43.64, which is just below, as I look at the market right now anyway. That's about where it is. So the big question for me is this 618 retracement level going to hold as support? Or are we going to crash through this as well? If that happens, hold on to your hat, because we're then going much lower. So if we crash through this 618 support level here, Fibonacci retracement, we have more pain, and perhaps a lot more pain in store for ourselves with this market. So there's no celebration here at all. And the other thing I would notice is that between the 9 EMA and the 30 weighted moving average, according to what is called the 930 system, that I learned from Rick Monteith, who trades futures with it, when prices between these two moving averages, oftentimes we find support here. He figures this is a good buy position. In other words, an area where we should be buying the market. Well, I would do so if I get more confirmation, but right now I'm not adding any. In fact, I had to sell some stocks because I had to follow my rule, where on the daily chart, if I see the 4 cross below the 9, or the second sell rule is if I'm down more than 6 or 7%, but I usually use 6%, I sell. So I had to sell a few things. I could get into that later, perhaps on the weekend. In any case, let's turn to the daily chart. Okay, so here's a daily chart of the S&P 500 that I typically use, although I think I'm going to bring up Jake Bernstein's chart, what I learned from Jake's anyway, later on. So let's take a look at this first. Well, the first thing I notice here is that we got that breakdown when the 4 crossed below the 9 right up here, right on, what was that? September 9 is when the 4 crossed below the 9. See how well this 4 versus 9 EMAs work? This is a good sell signal. I've been using this for a long time, okay? You wanna lighten up, sell your individual stock. If you get this sort of pattern here, don't suffer more losses if you could avoid it, okay? So that's what I do, and I tend to do that. Sometimes I deviate, and that's when I get hurt. Smart Alec, right? Okay, so what are we seeing on the daily chart? On the daily chart, what I'm seeing here is that this is your 9 EMA, okay? Now, sorry, this is the 30 weighted moving average. It comes pretty close to the 50-day moving average right here, this volume weighted moving average. Now, the first thing I'm noticing, and I'm going through this with you live here, I haven't reviewed this before. So what I'm noticing here right now is that the 50-day moving average is still trending up slightly, while the 30 weighted moving average is trending down. They're sort of converging on each other here. So that's the first thing I'm noticing here. And then while the market came down, it hit that 618 retracement level, and the market rejected lower prices here and closed just above 618 retracement, right? Then the next day, it came down and settled just closer, even closer on the 618 retracement level. For 3 or 4 days after that, 3 days, we had a rally, but where did we stop? right at the 30 weighted moving average, the 30-day weighted moving average. This is acting as resistance, and I pointed that out in the weekly workshop that we did, or family meeting that I sent everybody. Okay, this acts very often as resistance. If we could break above that, we could see bluer skies up here. But right now, there's no indication of that. And if we look now, you see how the 4 came up to the 9 EMA but didn't cross it, bounced off of it and came down, right? As this big candle occurred. But again, this candle occurred here yesterday, and where did it stop? Exactly to almost to the penny at the 618 retracement level. Today, we have a doji type candle, which is giving us, when you combine these two candles, a bullish harami. A bullish harami. So if the bulls want a little something to hang their hat on, this is something you could hang your hat on for now. But you better hold your hat because it might get blown away if we keep going down here. Okay? The other thing that seems encouraging to me here is that the parabolic is still below the most recent bar. So on the daily chart, you seem to be getting a switch to an uptrend with the parabolic, okay? And that's about it insofar as the price action up here is concerned. But notice how many times this 618 dotted line seems to be holding. 1, 2, 3, and perhaps today again, unless we break through it today, later on. Going down to the triple momentum indicator, you can see that it broke below the 4% line, right about here, where the market started going down. See right here? Look at the price bar at that vertical line, right? That's where we started dropping. And of course, had we been selling here, selling at that level, we get out. Now we also got here a sell signal on MACD, and then we got a sell signal on the other MACD. So we were getting all these indications of a breakdown here, and then of course 4 crossed below 9, the 4 EMA below the 9, and then all hell broke loose as we came down. So what we have here now in the triple momentum indicator is that I drew a trend line on the highs from this high here all the way down to here, and we broke above that. We broke that trend line of the highs, right, on the triple momentum indicator. But now we're back down. Sitting right on that trend line. See, if I move it, you could see that it's sitting right on that trend line. See right there, okay? So it seems as though we might find some support here at the triple momentum, at the 618, but there's no certainty on that. By the end of the day, we could break through it, because there's a lot of bearishness here, and I'll show you some more. Now on MACD, we don't have any classic divergence, although bears are weaker in this area here than they were over here. There's a weakness of the bears here. Same thing on the sell signal. The bears are weaker here than they were over here. So all in all, the chart is still more bearish than bullish. Okay, so if you didn't do any selling, you might want to take a look at your stocks and see if this is a good time to do some selling or protecting the portfolio with options in some way, whatever your choice is, And I had to do some selling, as I mentioned before, because, all hell broke loose here, right here. Let's stop here and bring over Jake's charts. Well, here's a weekly chart on Jake's moving average channel, as he calls it, where you have your 10-week moving average of the highs, this green line, and the 8-week moving average of the lows. And as we know, just a quick recap, Jake usually wants to buy the market at the moving average of the lows, okay? So he would be buying pretty much in this area here, in the channel, like here. He would be buying it here. He would be, if this were an individual stock, let's say, right? But now you see that weekly chart broke down. We had a hammer here, but now we are having a bearish candle again this week. And so you can see the Fibonacci here. He doesn't use Fibonacci, but you can see I left it here. When you put it on one chart, it appears on the other, on TC, you see. So anyway, well, let's deal with what Jake might have to say. And I'm not going to pretend that I know what Jake Bernstein will always say here, but let me tell you what I understand. All right. Jake's chart is on a weekly chart is still fairly bullish because we don't have a sell signal. We don't have two complete successive bars below the 8-week moving average of the lows, this red line. And we would also need this AD line, the accumulation distribution line, the Williams accumulation distribution line. We would need this line to be below the 57-week moving average of the AD line. And we don't have that. We still have the accumulation distribution line above its moving average. So Jake's weekly chart is looking a lot more encouraging from a bullish standpoint, okay? Because you're not getting a sell signal on the weekly chart. But the daily chart is different. So let's go to the daily chart. On the daily chart, here's what happened. We got two complete successive bars below the 8-day moving average of the lows. These two successive complete bars. And that's worrisome because at the same time, you had this you had the 80 line below the 57-day moving average of the 80 line. So this was a bearish signal. This was a sell signal on the daily chart. Since then, we had a rally back up to the top of the channel, the 10-day moving average of the highs. But notice that the 80 line never crossed above the moving average. And this concerns me. All right. This is why I am very cautious here right now because I didn't see this line cross above the 80 line cross above its moving average. And what happened since then? We found resistance here and came back down. And as we saw, sit at 618 retracement. And this is where we are. So this is problematic. This sell signal here. I don't know. I'm not as familiar with Jake's work as it's only in the last couple of years that I started really taking a closer look at his work. But I'm concerned about this sell signal here, okay? And you can see I circled this because this is where the 80 line, in other words, the market is on a real sell. They are distributing or selling stocks. They're not accumulating or buying stocks. This is what this 80 line is telling us. We do have the MACD here, but Jake doesn't use it, so perhaps I shouldn't go into that again. And on the other hand, we have two spikes now on the force index. So spike down here, spike down here, and spike down here, right? And now, if we still have an uptrend, if we can make a case for an uptrend here at all, then this spike down should lead to a rally. Will we find resistance again at this moving average of the highs, the 10-day moving average of the highs? We don't know. So I'm just showing you the conflicting signals that we're getting. But this bothers me, this. And of course, the sell signal we had here from Jake's daily chart. Let's pause here. Let me collect my thoughts. So I thought I would take a look at shaking and see what the SPY is telling us about the current market. So here's SPY. Of course, as you know, it's a spider of the S&P 500, large cap blend ETF. It's an ETF. And you have this nice uptrend. As we know, the S&P trended up for a long time until we started breaking down here. So now we're below the 200-day moving average, okay, that they use. It's approximately 200-day moving average. And right now it's rated neutral by shaking. Money flow fell out a bed here, but now money flow has been increasing in the last couple of days. It seems to me, it seems like the institutions are maybe buying, maybe doing some buying here, bottom fishing. The other thing to notice is that we became very oversold here, very oversold at this level, right? And since then, it's been trending up, the oversold indicator, oversold, overbought indicator. And there's a lot of room here. Now, how does this oversold indicator work? I mean, let's go back here. It drops below, right? Come on. Yeah, it drops below. Just if you check this here and look at the price bar here, you'll see that it works very well when this market becomes oversold. So here it became oversold and rallied from there. At this level of being oversold, let's see what happens. It continued to rally. At this level of being oversold, it rallied from there, became overbought, pulled back a little, pulled back and became oversold. When it became oversold here, it rallied again. Oversold here, rallied again. So when we get this oversold condition, we ought to, pay some attention to it. In this case here, let's see what happens. It rallied up from there. And now we are now in neutral territory on the overbought oversold indicator. But it looks as though there is some buying coming in here. The relative strength, I'm sorry, it is a relative strength that increased here for this indicator, and that's comparing it with the Russell, okay? But I'm sorry, if I misspoke earlier, I was talking about the institutions buying, but in fact they were still selling. This is the money flow here, not this. I was misinterpreting this, so please accept my correction. This is relative strength. This is money flow. This is where the institutions are still selling, in other words. But so we are oversold, but institutions are still selling. And these are some stocks here that I have on my main watch list. And you can see what they're doing for today. A little bit of upside here on Intuit, Regeneron, Signet Jewelers is up again, TMO, Thermo Fisher, Williams Sonoma, the shipping company, Costco, Dell, InMode is up 8% today. So anyway, I think I'm going to end here because I just wanted to show you a few things on the general market and take a look at what it was saying here well, before we end, why don't we look at Qs? Why don't we look at QQQ, the NASDAQ? Where's the NASDAQ compared to, the rest of the market? Well, you can see that the NASDAQ became very oversold too. And the institutions haven't quite sold out because while they were selling, it didn't drop in the negative territory as it did on the SPX, SPY. So relative strength is still very strong and it's oversold. So are we going to move from oversold to a rally? We don't know, but we'll talk again on the weekend. Have a good week, remainder of the week, and we'll try to do this on the weekend. Okay, bye-bye.